You're listening to the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.
And now, it's time for the show that breaks down the options market, from unusual activity alerts to market analysis, strategy overviews, listener questions, and much more. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the option block with your host, Mark Longo from the Options Insider Media Group, and co-hosts Uncle Mike Tussaw from RCM Asset Management, Andrew the Rock Lobster Giovinazzi from OptionPit.com, and Mark the Greasy Meatball Sebastian from OptionPit.com. The Option Block is brought to you by Options House, a powerful, easy-to-use, and intuitive online trading platform that's not only fast and reliable, but comes with dedicated customer service and a great trading experience. Trade on the platform that's top-rated by Barron's and Stockbrokers.com. With completely transparent, value-oriented pricing, Options House is your all-in-one solution for options, futures, and stock trading. Plus, open and fund a new account at optionshouse.com/insider today and trade commission-free for 60 days. Options House is a member of FINRA, SIPC, and NFA. And now, get ready to hit the option block.
All right, everybody. That rockin' tune means it's time once again for a little program we like to call, in these parts, the option block. A little bit of options wit, some wisdom, a little bit of hilarity, a sprinkling, a dash, a trace of unusual activity, some education, of course, a bunch of your questions, some peering into the future, and you have the heady brew that is the option block. My name is Mark Longo from theoptionsinsider.com, as well as, of course, from the ever-exciting Options Insider Radio Network. If I'm a little bit out of breath, it's because I've been running around the studio right before the show here, grabbing some dates for some things I want to make sure I remind you guys about. By the way, if you guys do like the show, and of course, hopefully if you're streaming it or joining us live, Mixler every Friday, Monday and Thursday, 3 p.m. Central, 4 p.m. Eastern, MIXLR. Just follow us over there at Options or on the website, and you can get the link. The link never changes, so if you've grabbed it once in the past, check it out. Or follow us over there on Mixler. It'll notify you the second we go live. We'd love to see you guys in there as well. Or, of course, via the mothership, theoptionsinsider.com. While you're there, of course, breaking news from the options market, unusual activity, education, options facts, frequently asked questions. We're adding a few more of those these days, so you can check those out as well. And, of course, click on the Insider Radio Network tab, and that is where your journey can begin. Also available, of course, all the major outlets, iTunes, TuneIn, Stitcher, even via their app stores, of course, so search for the Options Insider Radio Network mobile app. And however you access us, make sure you hit us up with your questions, your comments. We love to hear from you guys. We'll be getting to those in a little bit. And the date I was running around to grab is, of course, if you are going to be in the Chicagoland area this Thursday, October 6th, we'd love to see you at a great event. It's Rocktoberfest, and silly name aside, it is for a good cause. It's for the A Leg to Stand On charity, where they help children in the developing world get prosthetic limbs, which is a fantastic charity. If you haven't listened to it already, check out my interview with their founder. It went live on the network today. You can find it on our interview show. Again, you just subscribe to our main network feed. You get all the good stuff there. If you're going to be in Chicago, City Winery, this Thursday, October 6th, 6 p.m. over there, 1200 West Randolph. Learn more, ALTSO, that's ALTSO, alegtostandon.org. And so click on Oktoberfest Chicago. If you're in New York, you can check out the New York event as well. It's a great event, a worthy cause, hopefully. We'll see a bunch of you guys there because we'll be there as well. And speaking of being there, let's see who's there on the old program today. Let's go in order of pure proximity, which is down the hall, down the street, a little bit, 2 blocks or so, to the Options House HQ, where we are joined by good old Mr. Steve Clausen himself, the Chief Investment Strategist over there at Options House. Steve, welcome back to the program on this fine Monday afternoon.
Thanks very much, Mark. Delighted to be here. Finally, it stopped raining in Chicago. This is all good.
Yeah, we're getting some of that fall weather a little bit earlier. I think it's gonna warm up again this week. So back into the mid 70s or so, which isn't bad for October in Chicago. You know, once the calendar clicks to September in Chicago, typically the long pants and the jackets got to come out. So if we get a little bit of September, or get a little bit of 70s, I should say, into October, we'll take it here in the old Windy City. And then joining me a little bit farther out, the radius expands once again to that provincial metropolis known as St. Charles, Illinois, where we are joined by Uncle Mike Tusa from RCM Wealth Advisors. Uncle Mike, welcome back to the Option Block program on this fine Monday to you as well.
Always happy to be here where the weather is always sunny and 85.
Yes, that's true. Your little provincial hamlet is indeed a paradise on earth. Way to rub it in for the rest of us who have to deal with real world weather on a regular basis. And last but not least, someone who's a bit under the weather, but he's still joining us today. He is the Rock Lobster himself, Mr. Andrew G., a.k.a. Andrew Giovinazzi, a.k.a. the Rock Lobster, joining us from the Option Pit Satellite HQ out there in scenic and sunny Maine. Mr. Rock Lobster, welcome back to the program, sir.
It's a little overcast off and on, and lots of acorns are falling out of the trees. I've been consulting the more local, long-standing residents, and they're saying all these acorns coming out of the trees mean we're going to have a wet and snowy Easter. Sorry, Christmas. Winter.
I was going to say Easter. Wow, they infer a lot from those nuts up there in Maine. A little bit of Easter
like
already.
I said, I'm a little slow on the uptake today. A little slow.
I'll make sure to keep you on your toes and throw you a lot of curveballs throughout the show. It should be fun. All right, listeners, with the team mostly assembled and mostly coherent, let's keep on rolling right on into the trading block.
It's time to break down the latest topics, trades, and trends in the world of options. It's time for the Trading Block.
All right, everybody, welcome to the Trading Block. This is, of course, the portion of the program where we break down what was moving, what was shaking, what was rocking, what was rolling in today's market activity. And interesting day here. By the way, we're recording this and streaming it live on Monday. September 3rd, for all of you out there playing along on the old home game, the old home version, and most of the major indices closing off a wee bit today, off about a third of a percentage point or so. NASDAQ slightly less. The S&P right there, right about a third of a point. The Dow a wee bit less as well. So not a lot of love for the broad street today. And of course, with all of this, one of the few things taken up today, VIX cash taken up to about a little over 1362 or so, to be precise. So getting some love again after selling off. Of course, didn't sell off as much as perhaps we wanted it to for our Vol Views program on Friday, but we've learned that the VIX is a fickle mistress. She giveth and she taketh away. And she took away again last week. But giving Mr. Russell Rhodes one of his few victories of the year, so he felt a little happy. He's been buying the VIX pretty much straight for the last 6 months, and he finally got a win, so he was happy. So there we go. With every loser, there is indeed a winner when it comes to VIX. And before we get into things that are catching in terms of activity and things like that, let's start off with you guys. What's been catching your guys' eyes, I should say here, in this interesting start to the week. Let's start over there in proximity again. Let's go to OHHQ. Steve, I know you've been running around into meetings and whatnot, a lot of stuff cooking over there on the corporate front today, but what was catching your eye over there on the old OH platform? What are you blogging about? What are the clients and customers up to over there in the land of all things Options House?
Yeah, I think today was interesting, and this week as a whole, I would even say is going to be sort of a processing week where people have time to think about a few things, right? I mean, Friday was the end of the third quarter, and a pretty nice rally and energy continued. Financials with a little bit of the Deutsche Bank scare diminishing and allowing financials to experience a real nice day on Friday, but Friday was the end of the third quarter, right? And things seemed really blue sky and buyers were out there, but were they really buying or were they window dressing the end of the third quarter? And I always get concerned, and I always it catches my attention when the beginning of a new quarter, the market doesn't perform very well. And for most of the day today, not a lot of volume, but it's Rosh Hashanah. There's an old adage: sell Rosh Hashanah, buy Yom Kippur. But there were a lot of sellers present, right? I think that a little bit of Friday's enthusiasm was perhaps a little too much, and a lot of people took some risk chips, if you will, off the table, and there were people willing to sell and willing to sell a little bit lower. Market hung in there though. It came off its lows and closed with very sort of unchanged kind of levels, down, yes, but unchanged. But so I don't think there's going to be a lot of conviction this week until the end of the week when we get some numbers that we'll talk about. But I think it was an interesting day where people are going to sort of recalibrate their thought processes now that we're into the fourth quarter and look to see the macro impacts of what is coming up, as well as because we will be next week entering earnings season unofficially with Alcoa's earnings that come next Monday. We'll get some specific earnings and some specific catalysts that will allow people to focus on stock-specific ideas rather than looking at these macro views of OPEC production cuts and Deutsche Bank worries and election concerns. It'll be interesting, and I do think this week is the week for people to sort of retool and get their heads on straight.
Yeah, it will be nice to kind of fixate on some of those more micro issues. We like earnings. It's a very tangible thing. Here's how much money you're making. Here's what your guidance is going forward. Here's what the straddle is saying. Here's what vol is. We kind of like things we can sink our teeth into, like as opposed to what you were referring to there, Steve, with the kind of voodoo arcane mist that is the macro stuff with the Fed and everything else going on overseas, where sometimes you have to kind of just scratch your head and say, what the heck is going on? Speaking of what the heck is going on, let's go a little bit farther out to St. Charles. Uncle Mike, what the heck was going on out there in the old RCM Wealth Advisors view today?
What the heck is going on? That should be the title of the show today. No, not a lot. I mean, we came down a bunch today earlier in the trading session. The only thing of any significance on my radar that I'm really seeing that makes anything even remotely noteworthy today would be silver. It is down almost 2% on the day. GLD was down just 30 cents, so really not a whole lot of movement along with that. Precious metal. Bonds were down a little bit today with TLT going down 70 cents. So that is a little bit peculiar considering we have a down day in the market. But I wouldn't say anything too crazy or too noteworthy for anything that I'm watching. But I agree with Steve. I think this week's going to be, it's a good week to, well, as Steve put your heads on straight again. And, the only thing we really have coming up, I mean, tomorrow we have the vice presidential debates, but I've never really, in all my years in the markets, I've never really heard anyone wanting to do any major trades before vice presidential debates. But once again, as I've said before, I have faith in our politicians. They can sure screw something up in some way. You never know. So, but all in all, not a lot to report on the day today.
Mike, you were glued back in the day to Cheney Lieberman, like the rest of us. Just riveting television there. The market's just roiling off of every word coming out of that debate. That was huge, sir. How dare you? How dare you besmirch it?
Well, I'm sure back in the days in the pits, they were probably just saying stuff like, I'm long Mondale. I'm long Mondale. No. I'm short Bush. I'm short Bush.
There you go. There you go. The rollicking days of all things early 2000 election era. Let's move on. The Rock Lobster dealing with some medical issues over there. So instead, let's jump on. While he is detained elsewhere, looking at what kind of a month it was from an options perspective in September. Of course, it is the beginning of October. It means it's that time of the month to look back at the month that was, and overall options. I guess it kind of depends how you slice the apple, or maybe if you're a glass half full, glass half empty kind of guy, how it kind of boiled down for you. Obviously, we look at the options perspective. That's kind of where our interest lies, and with our friends over there at OCC putting out their numbers today. Overall exchange listed options volume about 357 million contracts last month. That's actually up 1% from this time last year, so that's a nice little sign, even though overall year-to-date volume is actually down 3% from this time last year. So we'll see. Maybe we get a rockin' October And certainly last year, this time of year, helped to contribute a lot of volume to the end of the year. So maybe if we have a rollicking end to the year, we can see if overall volume can rally back from its current slight slump. Breaking it down a little bit more, equity options last month, about 319 million contracts. That's actually a 2% increase from September last year as well. So equity options silo faring well. The rest of the market, perhaps not so much. ETF options off about 6% from last year with about nearly 146 million contracts last month. To break it down a little bit further, index options off a whopping 11%, only about 38 million contracts last month compared to this period last year. So broad equities looking pretty good. You get a little bit farther afield into ETFs and indexes, not so much. That is perhaps where the weakness lies. I don't know, Steve, does this kind of correlate with what you guys are seeing over there at Options House Land, or you guys more see spikes in particular areas, perhaps because your clients tend to veer in one area versus another? Or is this kind of stuff surprise you, or is this pretty much what you expect?
It's pretty much what I expect. In that September, we had a little bit of volatility in the marketplace finally. We remember in August, we were bemoaning the fact that historical vols, the actual movement of the index, was about 5%, and five historical vol and implied volatilities were probably 8 or 9%. And that's looking at the broad-based indexes. I am a little bit surprised that the index numbers were down so much, but I guess that's relative to last year again, if you remember again, put it in volatility perspective, last August of 2015, we had quite a significant sell-off. So then September still had people probably running to the indexes to hedge some of that macro risk that they were feeling in their overall portfolios with an elevated implied volatility. And this year we probably had the opposite, right? Where the market and Mr. Market had to prove that it could actually move again, which it did a little bit in August, and we got up off the mat a little bit as far as daily volatility goes. So that would definitely help the equity options and the September volumes vis-a-vis August of this year, certainly. But then at Options House, the thing that's cool about equity options is even when nothing's going on, there are individual equity stories that are worthy of people's attention. There's no earnings this week to speak of. There are a couple names that are going to announce earnings, but even today, and we'll talk about Tesla probably in a little bit. They had sales numbers come out. Auto numbers came out. GM, Ford were down, but Tesla had some surprisingly good numbers, and so the stock responded accordingly. In equities, and this is what's really cool about trading equity options, there's always a story you can find, and certainly in the retail universe, retail investors, they go to the story because the story creates liquidity. More eyeballs create more liquidity. Liquidity creates liquidity, or liquidity begets liquidity. And I think that equity options, individual equity options, especially now that we're about to enter earnings season, a real fun place to be because there will be stories, there will be individual stocks, sectors that are worthy of investors' attention and will attract the volumes.
Yeah, it's kind of a nice thing about having such a broad sector. If one area is down, one name is down, one area kind of isn't lighting it up, then you can move on to something else. And as you mentioned, let's just get into it now. Then a name that certainly was lighting it up on a relatively meh day, a good old Tesla lighting it up pretty aggressively today. Was up nearly 5% at one point, or it was nearly $10. I think at closing the day up about 3%, so giving up some of that gain. Still up nearly 6 handles to right around 210 or so. And as you mentioned, Steve, a lot of that love coming on their quarterly sales numbers, which people have always kind of slam them as being kind of a way to, shall we say, scam some government subsidies through a variety of incentive programs, but they don't really deliver a lot of cars. This past quarter, that story seemed to change a little bit. They had a 70% increase in the number of cars they actually delivered over Q2, so they're up to about nearly 25,000 cars. Production also up about 35%, so people who have been out there saying there's not a lot of sizzle or not a lot of steak with that sizzle, a little bit more stake this past quarter. Stock rallying pretty hard, like we said on the news today, before giving up the ghost toward the end of the day. Mr. Rock Lobster, I see that you're healthy and back with us again. The rumors of your impending demise heavily exaggerated. That said, what was cooking today? Was Tesla lighting it up in the pit chat? And if not, what was?
I'm massively healthy. We talked about it a little bit because every time you have an Elon Musk tweet, it's always this is super fantastic, and now we can go raise more money and build the 3, the S3. And I looked at that and I said, I wonder if this rally is going to hold up. Tesla's on it's got a lot of value for what they're going to do in the future. But when they come out with these announcements, it's sort of like 2 steps forward and 1 step back. But now now that we know we can build these cars, we're going to go out and try to raise more equity or sell more debt to finance production, because that's what they have to do. I guess they want to try to be cash flow positive, which it's all a good thing. I'm trying to see how long that the stock price can hold up as they keep issuing, more debt or more equity to fund, their next iteration of the car, which kind of makes money, but not exactly. So I just found this one as I would be surprised if the stock held up on this, just because of they need great announcements just to kind of keep afloat. So I just found this funny. That's all.
Yeah, it is kind of funny that they've kind of built up this expectation, this cycle where if they don't feed this, it's worked for them. This hype PR cycle has certainly worked, and then doing other extraneous things, about talking about things to missions to Mars and everything else, like keeping that PR cycle rolling. The problem is, right, you have to feed that beast on a very regular cycle, and if you don't do that, and we're starting to see Apple kind of feeling the other side of that, people were expecting them and demanding them to have great announcements on a regular pace, and they haven't really kept up with that. So, the stock's doing well now, but up until then, it wasn't really looking too strong. And of course, Tesla now rallying today, but you're right. We'll see if this is a longer term trend. Interesting stuff lighting it up out there in good old Tesla. Today, let's look really quickly how they were faring. Most of my platforms back up, which is nice. They've been averaging, so light volume today, if most of this data is correct, only about 35,000 contracts out there in Tesla land. So, of course, I think some of this is still updating. There's been a lot of data provider issues today, shall we say, out there in the options world. So let's keep on rolling into the odd block and see if we can sort out some of their issues for them as we keep on rolling.
It's time to break down the most interesting, unusual, and downright questionable options activity that's been identified by theoptionsinsider.com. It's time for the Odd Block.
All right, everybody. That funky tune means it's time once again for the Odd Block, the portion of the show where we break down what's moving, what's shaking out there in the old options market today. And if you follow the show, if you know what we've been up to for a while, you know exactly what this segment is about. This is the portion of the show where we find some of the weirder, the wilder, the more whimsical paper out there in the old options space. Going to kick things off in a name that's been, shall we say, moving and causing a lot of headlines here in the old internationally and indeed domestically over here. Going to kick things off, and of course, good old Deutsche Bank, ticker symbol DB. If you haven't heard this name, you haven't been following the headlines in a little bit. This thing's been, shall we say, lighting it up in the wrong way of late. Today, lighten it up again, perhaps, I guess, depending on your perspective, in the wrong way yet again. This is the name that's been averaging about 25,000 contracts Today looks like doing a little bit more. Looks like doing about 88,000 or so. So a pretty active day out here. But what caught our eye wasn't net volume, no, listeners. It was indeed, looks like a bit of a downside put spread, perhaps covering or perhaps opening. What we saw was the Jan 2017 8-4 put spread going up. Looks like paper buying the 8 and then selling the 4, doing that for 60 cents and 15 cents. So a whopping 45 cents net here, going up like in two blocks over there on the Philly. There is some open interest there on the old 8, so it is possible we have paper maybe buying back the 8s and then rolling down, taking those off the table, then rolling down to a little bit less meaty, less scary strike over there on the 4. If this is indeed opening, then it could also be just someone deciding, you know what, let's put on some nice downside spec here overall. Yeah, a pretty decent paper open on a lot of these puts going up today. Mr. Rock Lobster, and I know you've been on death's door, but you've still been watching a lot of activity out here in good old DB. What do you think of this put spread here in Deutsche? You think it's opening? You think it's just someone specking to the downside? What is your gut telling you when you're not throwing up over there?
Not throwing up. Don't you find it odd that somebody would roll for 60, roll for 15 cents, and close 60?
Yeah, and the strike selection is intriguing as well, from 8 down to 4.
From the 4-8,
Yeah.
It's kind of feeling like they're taking a punt, possibly even buying stock against that. I couldn't see if there was an equity print. But, they're looking like, okay, well, maybe the 8's possible, but the 4 is unlikely. And again, I'm going to check the open interest tomorrow to see but why would you close those for 60 and then roll twice as many for 15? Is that, because that's the way the volume is. The 8s are a close if they were because of the open interest, and the 4s are an open. I don't know why you would do that. You're going to double up, and you're going to take. It's like I'm trying to figure out where they're whole on that trade. It's so that's why I think it's just somebody's trying to create some sort of a cheap spec on the downside, as far as I know. But they're still doing it for a debit on the 8 strike. So my guess is they probably bought some stock or they own some stock against it, and they want something in case it all goes yucky. But that's yucky being the operative word, I guess.
Yes, a technical term out here in good old Deutsche Bank. Yeah, it's a fun one today to do the odd block because, like we said, one of our main data providers here seemed to be taking it on the chin. So we're going to kind of improvise a little bit. If it sounds a little bit more improv than normal, listeners, it's because we're kind of kludging together a bunch of different data sources here behind the scenes to fill in the picture for you over here. Moving on to our next name / victim over here in good old odd block territory. That's a name we've talked about recently, revisiting them yet again. This is Pfizer, ticker symbol PFE, closing today about $33.68 or so, off about 0.5% or so on the day. So it wasn't a huge underlying move day that caught our attention. Instead, it was what looks like a little bit of a call roll out here potentially. It was, let's see, the Nov Dees 33 call spread going up on the November 4th, so in the weeklies, and then the Dees expiring on the 16th. So not just a straight up month-to-month roll. They're going up 5,400 times. Looks like paper buying the Dees and then selling the Nov. So it looks like our friends perhaps here deciding to take some of this Nov off the table, reestablish, give themselves a little bit more time to play. Not going up and out this time, though, just going straight up out, which is interesting. Heavy open interest here in the Nov 0433 call strike. In particular, I'd give you the exact number, but I don't have it in front of me here. Everything, like I said, is kind of screwy today. Actually, yeah, about 31,000 contracts nearly open on that strike. So some size open interest out here. And our friends here looking to keep the party alive and deciding maybe an early roll is discretion here being perhaps the better part of valor. This name Pfizer has been kind of languishing in this mid to low 30s range here, about 33.5 up to about 35, 36 going back a few months ago. So it has had a little bit of upside of late, but right now not exactly seeing that here. Mr. Rock Lobster, once again, we look out to the land of the sickness, aka Maine. I almost said Portland, but Maine, somewhere in the hinterlands of Maine. We won't get that specific. And what's your take here? You think this looks and this walks like a duck and quacks like a duck? It kind of has the feeling of a duck, aka a roll in this case, Mr. Rock Lobster. Or do you take issue with that?
No, I think it is kind of a roll. We on the regular UA website option unusual activity last week. I thought originally this was a Nov 4, Nov 18. Nov 4, Nov 18 being the terms, the weekly terms. Somebody I thought was trying to game the dividend, which was possible. Now all of a sudden, because I think they were going to try to squeak by or something, and now maybe not. Looks like now they're taking their calls, which looks like a covered call on the fours and rolling it back to December. So all of a sudden, this whole trade concept to me, I think they're buying back the short Nov fours and then selling the D's on the 33 strike for a buy right, possibly again to get out of, to escape the, I think it's a div play, and it's almost like they screwed it up the first time and now they're trying to redo it the second time. If that makes any sense, which would qualify for our week as our Love Your Broker trade of the week in this particular issue.
I think Steve's getting jealous again. He's like, how come all this love isn't heading our way? He's a fan. I don't know if you know.
5,000 contracts.
Yes.
Who knows this one didn't?
That's true.
Oh!
That is true. We are making grand assumptions. I just say, in general, I know you're kind of a fan of the Love Your Broker category of trade. We'll see if we can find a few more for you whenever you pop up on the show here, so you can just see people just rolling half strikes for 100,000 each and all these other fun trades we like to profile here that all go under the loose umbrella, the loose rubric of Love Your Broker. Speaking of Love Your Broker, I'll let you listeners decide if this one falls into the latter category, even though I'm not inclined to lump it there just yet. Another name that, shall we say, has been making the headlines, but not in a positive fashion of late in the financial markets. This is good old Wells Fargo. You may have heard about an issue or two unfolding over there. Ticker symbol WFC. Closing today looks like around $44. Ending the day, actually a little bit south of 44, 43.83 or so, off about 1% or so on the day. So outpacing the market a wee bit more to the downside, as you might expect, given some of the bearish news we've been seeing coming out of there of late, as you might imagine. Today, this name lighting it up to the tune of the OCC 46, Nov 48. Call it a diagonal, call it maybe a roll. We'll have to see. Actually, no, the open interest in OCC is not enough, so it isn't a roll. But what we saw, like I said, the OCC 46, Nov 48, diagonal going up for about 4 cents, 18 cents on the Nov, 14 cents on the OCC. It looks like paper selling the OCC and then maybe buying the Nov, so buying the spread a little bit net out here. But in possibly, perhaps, usually you think of these as opening in the farther leg, closing, if there is a roll, closing in the narrower leg. Looks like maybe we got perhaps the other way around. Maybe perhaps opening in the near leg, which is October, and closing in the Nov. A bit of a funky one. Again, this is why we like to, that's why we call it the odd block, because things, when they're funky, they tend to get our attention. Wells Fargo, as you might imagine, given the recent headlines, has been trending somewhat to the downside. It was trading around near $50 when all this news started to break in a few weeks back or so, and ever since then has been kind of just trending down. Like I said, today closing shy of the 44 mark, hitting an intraday low of about 43.73. So this name having some problems, and perhaps our friend here taking advantage of the opportunity to do a wee bit of a roll, or Mr. Rock Lobster, are you taking the point counterpoint side because you're sick and you're feeling ornery and you're deciding, no, this is all opening? Where are you falling, sir?
So you're just saying I'm going to, just because I'm sick, there's going to be...
Just because you're sick, you're getting
extra
bitter.
umbrage?
Yes,
just
extra.
Going
extra
at you
umbrage.
just for no particular reason?
That's how you Mainers do it.
Would you roll this for a 4-cent debit?
Hey, I love my broker just as much as you do. Maybe more.
I'm guessing that this is an opening trade and they're trying to get their 48 calls for free. Although 46 is pretty close. So I could see that the October has the November has the heavy open interest. So you're going to close your 48s and sell the 46s for a 4-cent debit. That would be that's a love your broker trade on a whole nother level. Because Wells Fargo it wasn't trading close to 46 not very long ago. So that would be bold, I would say, as a right. I'm going to write the 46 calls for a 4-cent debit over where I was short my 48s. That's a head scratcher to me. It worked so well the first time we want to do it again trade, but you're getting less than you did before. So I can only surmise, if somebody has any common sense whatsoever, that they are selling the OCC 46s, they are buying the 48s, and they're trying to do that for a slight credit. That's unless they're just coming from an alternative universe.
They like it so much they had to do it again, Mr. Rock Lobster. I failed to see the issue with that. It makes perfect sense to me. I could see Mr. Steve working on this furiously behind the scenes. This one clearly has caught your attention. I won't guess as to whether or not this went up at Options House. We'll leave that up to the minds of the listeners. But what's your take here, Steve, on our friend here? Perhaps open and near term, closing out in the Nove, doing it for a 4-cent debit. A lot of things to scratch the old head about here. What's your take here on this trade in our good friends, Wells Fargo?
It certainly could be, as Andrew described, where we call that trade a hand grenade, right? Where you sell the nearer to the money, shorter term option, buy a further out of the money option in longer term, and try to do it for zero, almost free, 4-cent debit. But because of that open interest, it does look like this is closing. I would take the opposite side and think this is closing in November. Perhaps it was an overwritten call that worked for a while, but now you're looking at this thing saying, wow, November has 47 days to go to expiration. Do I really want to stay short these November options at any price and only be collecting, have to stay short, have to stay long the stock with all the downside that might have to have experienced with only a 14-cent or an 18-cent future premium that I can collect, right? I mean, do I really want to stay short these options, or do I close those, get in something fairly similar, but have this pain be over in October and have it be done in October? And if Wells can recover $2, which is 5%, between now and October, at least I'm out of this mess. But I'm out of this mess in 19 days versus 47 days. So I do think this might be the case of somebody that was short upside. Now it's only a 10 delta option in November. They want to be short something that is going to be off the sheets a little bit sooner than have to wait till almost Thanksgiving. And anybody that's long Wells Fargo these past several weeks doesn't have a whole lot to be thankful for as far as that position goes.
Yeah, not a lot of love for the Wells Fargo Bulls the last few weeks. We'll see. Speaking of love, let's get some of our listener love going on the show, because this Monday means it's time for the mail block.
It's time to take your seat on the All-Star panel as we read your emails, tweets, Facebook messages, website comments, and much more. It's time for the mail block.
All right, everybody, welcome to the mail block. This is indeed the portion of the show where you guys take the reins with your questions, your comments, your insights. Hit us up at Options on Twitter, via the website feedback form. A lot of you guys like to do that. Via Facebook every now and then. Some of you like to filter in via Facebook or, of course, via the old-fashioned way, questions at theoptionsinsider.com. Or, indeed, hit us up via the live chat, like our friend, my old compatriot on Trading Tech Talk, Mr. Henry Schwartz, just subtly reminding me, Andrew, that there's no outages over there at Trade Alert. And he's correct, so I thought I'd give him a plug, because I am running Trade Alert. Our main quote system, shall we say, is having an issue today. So I'm running Trade Alert in the background. Check it out, listeners, if you are so inclined, or if you like the retail version. Check out What's Trading, because it's been saving my bacon all day long today. No outages over there. Oh, he also mentioned that he says the Jan 8 puts out there in Deutsche Bank were bought for 25 cents back earlier in September. Stock was here, but the vol was 20 points lower. So there you go. Trade Alert, always good for to save your bacon, if nothing else, over here. All right, let's moving on to some live questions here. We got some. Oh, speaking of which, question of the week. Last week, a lot of you guys weighing in on this one. We asked you guys, how will the election impact the VIX? Are we heading for a Trump-ocalypse or a Clint-astrophe? Seems like a lot of our audience feeling the Trump-ocalypse love. Either that, or they just really liked that name. I got a feeling that's going to catch on. It's going to be featured elsewhere. With 43% saying the VIX is going to spike over 20 sometime between now and the election, and it's going to be Trump's fault that it happens. Let's see, 11% saying it's going to spike over 20%, and blame Clinton. So not a lot of love for a Clint-astrophe. Not as much love there. 17% saying it's going to stay around this range, somewhere in the 12 to 14. No real change. And about 30% or so saying a modest increase, from about 15 to 20 sometime between now and the elections. People chiming in too. People saying they're bullish on VIX over the next 6 weeks, and a bunch of other people chiming in with their thoughts. If you like that poll, you missed it. But we got another one up there for you now. This week's question of the week, we asked you, on a similar vein, sticking with the vol theme, we asked you, what is your preferred way to trade volatility? Let us know. Gave you 4 choices, VIX options or futures, a VXX, XIV, popular inverse name, or a little more hardcore, the S&P delta neutral type straddle. Or we said, hey, if one of your flavors of vol isn't in there, hit us up and let us know how you like to do it. This poll is new. It's only been up for a couple hours. We got a whole week to go. But that said, what do you think is... Well, first off, actually, I won't make you guys vote because you have your own views. Well, I'll ask you guys what you think is winning. Maybe Steve, we'll start with you. What do you think is winning our poll today?
Poll being how the election will impact.
No, that's the one we did last. One we did last week. This week's we asked people what's their favorite way to trade volatility. Is it going to be VIX options or futures, VXX, SIV, S&P, straddle, delta neutral, or something else entirely? I
think, well, with my lens of Options House, VXX is one of the most popular ETFs, ETF underlying stock and options symbols that are out there. Again, super short-term instrument. It has a natural decay based on that it's it has to use futures to try to replicate its moves, and with the VIX in a upwardly sloping price environment in futures, every time you have to roll out, it costs money, and you don't have as many contracts. So there's a natural negative downward bias on this and a lot of these ETN products. But VXX is super popular for super short-term directional moves in volatility.
So one vote for VXX. Uncle Mike, where are you falling on this poll question, sir?
Well, I'm going to go with VIX options / futures. I think that's the best way of going about it. I mean, I know with the natural decay that exists on VXX, if you're looking to go short VIX, you could make an argument for that. But I don't know if there's too many people that want to be too short VIX right now. So I'm going to go with the VIX options and futures.
All right, and last up, I'm just laughing at some jokes going forth here in our chat. All right, we got Mr. Rock Lobster. What are you feeling here?
So this wouldn't be my preferred way. This is what we're prognosticating.
Yeah. What do you think? What do you think is going to win?
Yeah,
this
I'm going to
poll?
say I'll say VXX is the retail way to do it.
Interesting. I was going to lean that way as well. I thought our audience would lean that way, but so far maybe we're poisoning them with all of our vol views talk and talking VIX, because VIX is blowing the doors off at 50% with VIX, 28% VXX, so a distant number 2, and then surprise, surprise, XIV and our Delta Neutral S&P straddle tied at 11% each. So again, the voting just starting. We got a whole week to go, so we'll see how that evolves. S&P straddle hanging in there a little more than I perhaps thought. All right, let's move on. It is Monday. We are friends over at Options House like to highlight some of the stuff that's cooking over there in their neck of the woods as well with their customer question of the week. And last time Todd had an interesting question. I believe it was about, I'm trying to remember what Todd's question was about. But this week, we have to go back and look. This week, we have a question, Steve. Looks like you guys are getting hit up a lot these days about future settlement. I know you guys now have an FCM, so you're playing a lot in that space. In particular, the old AM special quotation. So why don't you illuminate that somewhat arcane topic for our listeners?
Yeah, we're having a lot of growth in our futures customers, and a lot of people using futures to speculate and to hedge and to change their portfolio, with one or two quick trades. However, a lot of people are not aware that futures settle quarterly. I'm talking about the E-mini futures. The E-mini S&P futures, they settle quarterly, September, December, March, and June. And on those settlement dates, they don't settle to the closing price of the end of the day on the third Friday of those 4 months, but rather they settle to the opening quotation, to a special quotation, or an SQ they call it, that is actually the opening price of all 500 component stocks that are in the S&P 500. So a lot of people are a little bit surprised the first time they go through an expiration, that on Friday during the trading day, they no longer have a position. Their position has now settled if they have an open futures position or an open options position that expires into a future that expires into cash. These instruments are cash settled, so they simply pay off to that special opening calculation of all the opening prints of all the individual stocks of the S&P 500. And that price that it actually settles to might be a price that you never observe on that last trading day. And the reason this happens is if there are huge sell programs, for instance, on the morning with institutions trying to balance their books with their offset their expiring futures positions, they might sell a lot of stock so that every opening print is lower than the previous day's close. However, IBM opens like right away because it's super liquid. But all 500 stocks don't open at the same time. So the stock could open lower and then start trading higher again. And then the next stock opens lower and starts trading higher again. And now, the last 100 stocks that open, they take some time to open, and they're opening on their lows of the day as well. So when you add up all of those opening prints, all of those opening prices for all the stocks, you might get an index quote that you never observed when you were watching your SPX cash tickered throughout the day. And you have to be really careful of this. And quite frankly, most retail investors should probably close up their position and not play the opening quotation coin flip game, because you don't know whether the opening print is going to be up or down, and you also cannot react to it. So we really encourage our customers to not let their futures contracts expire and just take whatever that opening print is, just because it's such an unknown.
Crazy times over there in the futures land. Thanks for debunking that. I'm sure we'll have more questions on that, Steve. So keep your powder dry on that one for right now. We'll probably revisit that shortly. Speaking of revisiting, a lot of people chiming in on our various questions and polls today regarding. I asked before Rock Lobster while we were doing the show. I said, who would do that call spread or that roll we were talking about for a 4-cent debit? Our friend over there, Sell Put, saying maybe an intern. So there we go. Perhaps an intern was to blame for that ridiculous. No, not really ridiculous, but loving his broker role, and people out there chiming in via how they trade vol. Our friends over there, Vic Central, just saying very carefully. That's their right in. So maybe they're avoiding the S&P Delta Neutral straddles. Let's see, what do we got here? Oh, really quickly, we got time for about one more, I think. Charles Turo coming in. He's responding. Andrew, we were talking about these last week on the show. It was Dynavax, ticker symbol DVAX. Remember, we were talking about this crazy upside juice out here. This was a tiny little biotech, and someone was rolling out. I believe they were shutting down. It was the Jan 18 calls and taking them off for $3. And we were all, and the stock was about $11. We were all saying, man, that's crazy juice. This is, of course, a little biotech. They had some news today. They said that the FDA is asking for some more documentation regarding to one of their hepatitis B vaccines. This is kind of what people are expecting. So the stock was rallying a bit today, up about $2 to about $12.50 right now. People writing in saying, hey, that especially Charlie Turo here saying he liked that breakdown we did last week. So thanks for that, Charlie. And he said he's piling in. He's joining the fun here. He sold the Dees 22s for $2. No, he changed that to about $2.50, 8 times. So putting a little money in his pocket. He didn't say if he did it covered or not. For his sake, I kind of hope he did, and maybe he's hedging the downside of that stock as well, because this thing is poised to move. It's one of these little biotechs that are kind of at this point almost like a binary option. This thing is going to get a yay or nay from the FDA, and this thing's going to move or it's going to get wiped out. So he doesn't say what other legs he has on with those Dees calls. But Mr. Rock Lobster, do you recall this unwinding? Our friend here actually did this. Sounds like he did it back in early September. He was probably attracted by those juice levels as well, like our friend here was. Then he seemed like he kind of unwound it because it didn't really decay the way he may have expected. And that's not exactly surprising when these biotechs were, such a binary event. That juice is going to hang in there for a while. So if you're looking for a quick premium, right, maybe our friend Charlie here will be disappointed. What's your take here, Mr. Rock Lobster? Blasting out some Dees 22s in DVAX.
Well, I'm just looking at the 18s in January, and they're higher. they're $4 instead of $3.
Yeah, well, stock's a wee bit higher than it was back then. It's about $1.50 higher than it was.
Yeah, that's a pretty good size delta though of all that high, don't you think? They're moving.
Yeah,
they're moving. They're shaking.
This thing is crazy cakes written all over it.
Crazy cakes.
I could see this one attracting a lot of people via their scanners, and then maybe some of them thinking the better part of it. But it certainly does open some opportunities. And our friend Charlie here, he's not opting to go all the way out to Jan. He's playing it safe, Andrew. Just going to Dees. That's as far as he's going.
I you know what? I've traded enough of these to know that you can end up with a nasty exploded rotten egg on your face. So I would always say to anybody, be careful with these things, because the stocks can do things that you don't really you have that it's hard to believe they actually do. Oh, it's 12. Oh, it's $2.
Yeah.
Oh,
there's a reason they're pricing in $3 to $4 worth of juice on a strike. Strike $6 to $8 out of the money. These things they tend to move, and when they do, they move pretty aggressively. So hopefully he doesn't say if there's a vertical spread he's doing. He's got something else in his back pocket, stock, something in case this thing goes off to the races. And also he has a plan. A contingency to the downside. The nice thing about these calls being so rich, it does give him a little bit more cushion than normal to the downside. He's got about $2.50 to the downside now, so he's good till about $10. But still, hopefully he's got a plan for what happens if this thing gets below it, because if it does, it's going to happen pretty fast. But I could see why you might be attracted by those levels, Charlie. We'll keep an eye on you. Let us know how it plays out. Meanwhile, we're going to keep on rolling to our final segment. It's time for Around the Block.
It's time to tell you what we'll be watching on our trading screens until the next episode. It's time for Around the Block.
Like the man said, this is the portion of the show where we tell you what we're watching for the rest of this week, and it's still not really earnings season. That doesn't kick off until I believe about next week or so when we got some of the big names reporting. So you can't really look there for too much unless you're super excited about Micron. They still have to come out this week. So there you go. Got a few in Yum Brands. So if you're in that neck of the woods, maybe that excites you. But the big thing coming out later this week, of course, ye old non-farms. That's been a bit of a market mover of late, shall we say, surprising in different directions. And we'll see how that plays in. Maybe the impact being a little bit muted this time, because I don't think anyone is going to expect that a big number from this is going to translate into an immediate Fed raise, because we all know it's looming in about a month, and I've yet to see a Fed chairman make a raise into that big event. So we'll see. Maybe Yellen and her crew are made of sterner stuff, or maybe this will be data that they'll pocket for later. perhaps in December. That said, Uncle Mike, we'll start with you. What are you watching for the rest of this week, sir?
Well, I mean, I'll be watching the vice presidential debate tomorrow night, but as we said earlier in the show, not a big market mover. Of course, we have non-farms this week, but I agree with you, Mark. I don't see it as a big market mover. So the main thing that I think is really needs to be the focus at this point is to see if we can make another run at 2,200. We're about 40 points away from it right now in the SPX. And with that being said, we need a couple big days to actually see it, but that's still a big roadblock that the S&P mark has not been able to pass through. So I don't think there's going to be a lot this week. And once again, I'm watching the VP debates, but I don't think we're going to have quite the nightly futures movement that we did when Trump and Hillary debated.
It's a pale shadow of Cheney-Lieberman, the greatest of all VP debates. All right, and Mr. Rock Lobster, what are you watching for the rest of this week, sir, aside from your impending visit to the doctor?
I think we could see some lower vol on Friday. I think because a slight little anomaly with the way they calculate VIX, where you're just not going to have a lot happening in the next month. You're going to have the election, but that's going to be a lot of post-November vol pricing. So I think we could see, I don't know. I would not be surprised if we saw a very low volatility number, let's say a 12 handle, 1225 in VIX after the non-farm payroll number on Friday. Because they're not doing anything with rates. We're waiting for earnings. You're kind of in, unless the Deutsche Bank thing, unless the Deutsche Bank thing actually becomes something, and it's easy for it to spook the market, but when vol's so low, it's easy for vol to jump through 2 or 3 points just if they take things down 1 or 1.5%. So, but I'm still guessing that we just kind of slide around and we get ready for earnings. But I still think the QQQs are still poised to keep moving higher. They haven't had a ton of help from Google or Apple this year, although Amazon has been just crazy since they're taking over the retail world. But I still think it's still my call for the end of the year. If there's going to be a Santa Claus rally somewhere, it will be there.
I'm feeling you on the VIX coming off after non-farms, except for you're forgetting one major factor that our listeners clearly pointed out to us last week, Mr. Rock Lobster, which is one word, Trumpocalypse. So you're forgetting about that. Clearly, we're destined to spike over 20 because that's what our listeners said. So watch out. Trumpocalypse looming in the near future. And last but not least, Steve, in addition to planning your own personal bunker for Trumpocalypse, what else is on your radar for the rest of this week?
You got to get that patented to put on 100,000 T-shirts to sell around Chicago.
I should have trademarked that before we tweeted it out there. I think it's out in the wind now.
Absolutely. I think it's going to be a quiet week. China's closed for the entire week, so we won't have any kind of impetus coming from Asia from China's portion of Asia anyway. As we mentioned, non-farm payrolls. I mean, if this number is a disaster, the expectation, I think, is for 170,000 new jobs. But if this number comes in like, what was it, May, when it just swung and missed hard, that really could diminish the percentage chance that people give to a December rate rise. And, it's sort of like bad news is good news when it comes to that sort of thing. And we might get that. That could be the impetus for the springboard over all-time highs in the S&P, 2,200. But other than that, the big news this week is Friday. The Cubs begin their journey. Their journey with destiny. Is 108 years too long to wait? Most Chicago baseball fans don't think so. But the Cubs playoff moves begins on Friday, and this city will absolutely explode in joy if they're successful, and I don't know how suicidal they'll get if the Cubs swing and miss, so to speak.
You thought Trumpocalypse was low delta. Now you're talking Cubs. That might be the lowest delta of them all, sir. But before the Cubs fans take righteous umbrage at that, we're going to head on out for this excellent episode of the Option Block. Started out looking at how the business was breaking down for last month. Long story short, not that great. I guess it depends really where you're parsing it. Talking about some interesting activity in good old Tesla, then moved on along to some, shall we say, controversial names in the financial space, including Deutsche Bank and, of course, good old Wells Fargo. Mixed in a little bit of Pfizer there as well. And then, of course, for your questions, talked all things Trumpocalypse, a.k.a. VIX. Talks about how you guys trade your vol as well. A lot of you guys loving VIX. We'll see if that continues for the rest of this week. Also looking at some crazy upside, still pretty crazy up there in good old DVAX. Tread carefully on that one, listeners, as attractive as it may be. Also talk some special opening rotations out there in futures, and we wrapped it up with all things VP debate and non-farms coming down the week. That said, let's check back in with my cohorts, my partners in crime, one last time. See what they have cooking in their neck of the woods. Let's start with you, Mr. Steve. In addition to debunking all things opening rotation and your blog, what else is cooking in the land of Options House?
Options House, a great brokerage for the active retail investor, I got to tell you. We've gotten huge uptick on some other things that we've talked about in the past where you can close short options for 10 cents or lower, commission free. And we're having huge uptick in option and equity traders that are adding futures to their tradings account so that they can use the same pool of capital to trade both futures and options. So please check us out.
There you go, listeners. If you are so inclined, check them out, optionshouse.com/insider. Kick the tires over there. All the cool stuff we're talking about here. Steve just mentioned the dime buyback and all the other stuff they do over there. Check it out, optionshouse.com/insider to learn more. And Mr. Rock Lobster, in addition to your impending demise, what else is cooking in the land of the pit?
Besides my impending demise, we're going to be doing our live gold classes series soon for this next quarter. People can pop in for that. Also, we'll have our next Saturday class will be coming out. Our last one was on daily options. We're making a bold prediction that we're going to have scads and scads of listings of daily options within the next year on all the major equities. So anyway, both of those, that webinar went very well. That was our highest attended webinar ever for people actually throwing us their dimes and quarters. So we'll keep rolling as we roll.
There you go. 8 people attended the webinar. Let's see if we can break it last time. I'm just
9.
9. There we go. Check it out, optionpit.com to learn more, listeners. And last, but certainly not least, Uncle Mike, what's cooking in the land of RCM Alts, RCM Wealth Advisors, and all things going along, sir?
All things everything. If you are looking for a financial advisor, someone who's more than happy to work with you for a couple $100 a month, not in fees, of course, but in just money coming in, I'm more than happy to work with you. Feel free to contact me if you want to talk option trading or options-based investing, which is what I do. Give me a call, 312-212-3531, or shoot me an email, mtusaw@rcmfs.com.
There you go, listeners. mtusaw@rcm.com, to learn more. And on behalf of Uncle Mike and the Rock Lobster, hopefully we'll be alive by Thursday's show, and Steve, and indeed myself, I want to thank all of you out there in the listening audience for downloading and streaming and subscribing to the show. And, of course, for sending in such great questions and comments and pearls of wisdom. Keep those coming. We love to hear from you guys. And we'll see you next time right here on the Option Block.
The preceding program was a production of the Options Insider Radio Network. For more quality options programs, visit www.theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app, available in iTunes and on Google Play. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.